Some investors don't just buy for dividend payouts, so it's always a two-way thing, either for capital appreciation or for dividend, or both. This is the tone of some of the feedback I am getting on the dividend result video. Whenever I read comments like this, it sounds like the shares of the companies that pay dividends are not appreciating as well. MTN shares appreciated by over 100% in the past year. So what? The shares of the companies that paid very good dividends are also appreciating. Some of them more than MTN. We will see them all in this video. Hello my people. If you're already a Flow Finance community member, you already know that your welcome is a sure banker. You should be on this side welcoming the new people with me, yeah? If you're new here, hello and welcome. My name is Flo. I am the class prefect of the Flow Finance community, a channel where we talk about money matters that concern us as investors. Investors in Nigeria, that is. So if you're coming here to try to talk us out of investing in Nigeria, we are going to write your name in the list of noisemakers. Disclaimers: I am not a financial advisor. I am not the CBN. I am not a stockbroker. I am not an investment manager. All those big names, I am none of them. What am I is that I am an investor that has over 20 years experience investing in Nigeria. So on this channel, I share my experiences in investing in Nigeria. I show you how investing in Nigeria works. The only thing that you will not hear me say is advice to buy this one, invest in this one, invest in that one. In every video that I make on this channel, I'll show you facts and I'll share my opinions. Anytime you think that my opinion is beginning to sound like flaw, it's telling you to buy this, buy that. That's not true. Potawa, come out. No, because I don't give advice. I don't qualify to give advice, but I qualify to share my over 20 years experience investing in Nigeria. So today, we're going to do a deep dive into the companies that do not pay us dividends, all in the name of we're appreciating, and they don't pay dividends. I mean, a company can do whatever or say whatever they like, but what pains me is when investors support they speak for the company rather than demanding that the company gives them what is due to them. You know what I mean? You're speaking as if you are the owner of the company. I'm not on the board of any company, I beg you. I am not the owner of any company. Any company that I invest in, I demand that you pay me good dividends and you appreciate as well. If you don't do that, I sell and japa with my money, because on that same Nigerian exchange market, there are companies that are both appreciating and paying good dividends. So this is why I don't understand these kinds of comments. For instance, our brother Francis says that some investors don't just buy for dividend payouts. So it's always a two-way thing, either for capital appreciation or for dividend, or both. Another brother Chuk says some companies in which you hold investments are growth stocks. So rather than paying substantial dividends, but I ask again and again, nobody has been able to answer this question. Why can't they do both? There are some companies doing that. I will not stay in a company that is not paying me dividends, and I'll be building cars upon cars, castle in the air. What if I wake up tomorrow and, or is it just me that was here in 2008? How many of us were here in 2008 when people woke up in the morning and the stock market has crashed? Do you know how many people that event took with it? Okay, some of them borrowed money to buy the shares, which you should never do. But that's the same thing that you guys are doing now. You are accepting that a company will not pay you dividend just because that company is appreciating. What if it fails tomorrow? It's the same. Even if you don't borrow the money, it's the same. All those hopes and dreams will crash. Because the only reason you're talking about appreciation is you want to sell the shares and make money, right? I know. I want to sell too. I want to be able to sell my shares in the future and I'll make some money from selling it. But while waiting for that time to come, because let's face it, that time may never come. Okay, I was joking in the comments that the MTN people, I was asking them if they will sell, but a lot of them were like, they won't sell. I was joking in the comments that I'm sure that a lot of them are waiting for REIT to get to 1,000 naira before they sell. But what's the guarantee that you will sell at 1,000 naira when 2,000 naira is around the corner? When you get to 1,000 naira, trust me, you know, say no. because there's buyer's remorse. You don't want to sell today and tomorrow you see the thing climbing up and up. You'll be like biting your finger. You don't want that. Continuing with Chuk's comment, they channel earnings back into expanding their operations. So in the long run, you benefit from stock appreciation rather than getting dividends. Why do we have rather than there? There are companies that will give you both. So why are we, is this Stockholm syndrome? This may be Stockholm syndrome, because I don't understand why some of us will like a company that does not pay us our money's worth. Some people are accusing me that I am too focused on dividends. But why? What's wrong with dividends? The reason why we invest is it not for us to make money. But now some people are making me feel like it's a bad thing to want to make money. It's a bad thing to want my money to give me more returns. Yeah. The ideal situation for me will be I'll collect enough dividend from my shares that I would have recovered the amount I invested in those shares plus inflation. Yeah, you have to count inflation, because we're talking about MTN being double. Have you counted inflation? Have you counted devaluation of the naira inside it? Let's not talk about those. Let's just say that it's 100%, more than 100% that you appreciated. But you have to think about all these things at the back of your mind. So ideally, as an investor, I want a situation where by the time I have to sell off shares, I would have recovered all my money. In that video, I told you guys, in fact, in that you saw me get up. Yeah, I went to sell my first holdco. I sold it at a gain, but of course, I bought it a long time ago. So if you factor in inflation, factor this, factor that, yeah, but I've recovered all the money I put into that, cash on cash, since I invested in First Bank. I recovered that. So any other thing on top is Jara. And the only way you can recover that is through dividends. Why are you people rejecting money? Please, can you explain? Maybe this is why I cannot be a good gambler, because what I see is that you people are gambling. Because how can you be waiting only on capital appreciation when other companies are paying both, are doing both? Please explain it in the language I will understand. Explain it to me like I'm in kindergarten, because it's not making sense why all these my brothers. Yeah, it's mostly my brothers. Because I don't think that women will leave money on the table, because yeah, that's basically what some of you are doing, leaving money on the table, all in the name of capital appreciation. Dividenda na agba. I don't know how to speak it in English. Are you allergic to dividends? Please answer me. Anyway, enough talk. Let's look at real data. I want to keep this analysis as fair as possible. So number one, I'll stick with the companies I used in my last video. And two, I'll keep the average share prices I already used for those companies from last year. And three, to calculate the price difference, I'll use the share price for today. I'm making this video today, Friday, August 15, 2025. To get the prices for today, I'll go back to this nifty website I always use. I'll put the name on the screen. Yeah, a lot of people are always asking me what website I use. It is a simple, straight to the point, clean website that gives you the data you need. It lists live share prices for all the stocks listed on the Nigerian Exchange. Look at them. I'll extract only the companies under consideration, and we have this. I have this Excel spreadsheet from the previous video, and this one where I include the capital appreciation figures, which is the percentage of increase in the share prices from last year. So looking at this table, last year, the average share price for Access Bank was 22 naira 10 kobo. The price today, August 15, 2025, is 27 naira 65 kobo. Assuming you bought Access Bank shares last year and now you want to sell them today, this is the amount of money you get from it, more or less. So you make 5 naira something per share as gain, and that's 25% profit from the amount you bought it last year. Of course, you pay withholding tax, VAT on withholding tax, stockbroker commission, and all those things. But yeah, let's leave all of that by the side and just say you get 25% profit. In addition, Access Bank paid you a dividend of 2 naira 50 kobo per share. Then for Dangote Cement, last year's share price 591 naira 10 kobo per share, and today it's 577 naira per share. They even lost money. So Dangote Cement that paid only 5% dividend yield even lost. Their shares did not, it went rocket style. early 2024. But now look at it. So if you're investing in Dangote for capital appreciation, you wouldn't even have made money 1 year later. Fidelity Bank PLC, 12 naira 40 kobo per share last year. Today, 21 naira, which gives you 69% capital appreciation. On top of that, Fidelity Bank paid you 16.9% dividend yield. First holdco was 26 naira 60 kobo per share last year. Today, it's 32 naira 85 kobo, giving it only, you see, only 23 naira 50 kobo per share. That's another reason why I sold it. It's not appreciating by much, and it's paying me. Look at what it paid me last year, because I'm a shareholder of First Bank. 2.26% dividend yield. That's absolute rubbish. Look at what the others paid on the bank. So before you know it now, you people will tell me it's because you're comparing it with a company in another sector. These his fellow banks here, do they have two heads? Let me ask the question that our parents ask us in Nigeria. Geregu, I showed the trend of 2024 for Geregu. It's pretty much a flat line. It was 1,000 naira per share last year. It's 1,141 naira now. Only 14%. So it didn't even appreciate by much. Dividend, no fit pay. It can't even pay you dividend of up to 1% dividend yield. Let's keep going. You people need to show me the ones that is doing capital appreciation here. Out of all these companies that you are defending, keep defending. If they don't pay you this money, they are paying it to themselves. Especially with First Bank. Was it not in the other video that we saw their earnings per share? Yeah, they could not pay dividend from it. GT Bank was 44 naira 55 kobo per share last year. Today, GT Bank is 97 naira 50 kobo. What is that? 118% capital appreciation from last year till now. In fact, anybody that bought GT Bank from the last public offer is making a killing already if they decide to sell it off today. And what did they pay for dividend? They paid a whopping 18.02%. Do they have two heads? What is this? Is this not capital appreciation plus dividend that matches the treasury bills interest rates of last year, that matches FGN savings bond interest of last year? What else are you looking for when you are investing? You just want to dash people your money. I know that we are playing around, but I really pity you guys. This Stockholm syndrome, who did it to you? Some of you, you're talking from your experience from investing abroad. Growth stocks. A lot of stocks outside Nigeria do not even pay you dividends. So maybe that's why you guys are focusing on the ones that don't pay dividend against the ones that are appreciating. But in Nigeria, Nigerian companies are known for paying dividends, please. It's normal to receive dividends in Nigeria. Stop comparing it to... I remember there was a video I made once where I said that when I lived in the UK, I looked into investing in the UK, and a lot of their stocks did not pay dividend. It did not make sense to me. Even the ones that paid were paying 2p, 2 pence, and all that. Shikini money? No. Nigerian stock market, receiving dividends is normal. So please, you people should stop rejecting it. It's normal. And the shares appreciate as well. Please, assuming that you don't know, I'm telling you now. The almighty MTN, is because of MTN that we are making this video. MTN investors don't want to stop, what do you call it? Don't want to stop defending MTN. Do they give you people free data? What is this? MTN last year was 214 naira 80 kobo per share. Today, MTN is 460 naira per share. Okay, in that video, I casually said that it has appreciated. At least you people can use that one to console yourselves. But when some people heard it, they thought that it's only MTN that appreciated. Please, no, it's not only MTN. I'm just saying that because all the other companies there that did well, apart from these ones that are included, because I just want to talk about them. I just want to show the contrast of some companies not paying dividends. But these companies that I'm focusing on that paid high dividends, they appreciate as well. MTN, yes, it appreciated, but you can see that already GT Bank appreciated more than MTN. MTN is 114%, while GT Bank is 118% appreciation. Please answer me in the comments. Which one would you rather go for? A company that appreciated by 118% as well as paid you a whopping 18% dividend, or a company that appreciated by 114% and paid you 0 dividend? please let me know in the comments and click the like button. This is a good time to click the like button. As you people are enjoying the video, support this channel by clicking the like button. Prefect must be gingered. Then NACO, this NACO that is not such a popular company, but this NACO is making waves. Okay, look at the last year, NACO was 36 naira per share. As I am talking with you now, today's price, NACO is 104 naira, a whopping 188% appreciation. Bikono koporo no NACO aka. I didn't even see this until I started compiling this thing right now. A round of applause for NACO. In addition, NACO paid 16.5% dividend yield for financial year 2024. You guys are the definition of when they put sugar in somebody's mouth, they spit it out. Why wouldn't you take this kind of company? Again, remember, I'm not advising you to invest in NACO, but I'm just trying to show you that you can have the best of both worlds. There are companies doing it on the Nigerian stock market. Stop dying in one company. Hold it, but stop defending it. If you want to hold it, if you're waiting for it to be 2000, is it not on this channel that we discussed early 2024? The forex people were telling me that they were hiding their dollar under the bed, waiting for when it will be 4,000 naira per dollar by the end of 2024. That is castle in the air. You don't have a crystal ball. That's your hope and dream. While you're waiting for that hope and dream to materialize, be collecting dividend, I beg. Stop leaving money on the table. Then the Sky Shelter Fund rate 122 naira 65 kobo last year, 249 naira 25 kobo. That's a 103% increase. And they paid 17.53% dividend yield last year. MTN does not have the monopoly of capital appreciation. Stanbic, you can see it, 56 naira last year, 111 naira this year, 98%. That is literally 100% capital appreciation. UBA was 26 naira 30 kobo last year, 48 naira 50 kobo this year, 84%. And UBA even paid the highest. Yeah, in my books is the highest because this Wema, you already know what I said about Wema's books, that it wasn't clear what they paid and what they didn't pay. So 19% dividend yield. I'll take UBA 5 times over MTN that appreciated like others and paid 0 dividend. And next year they may still not pay, because they're still in recovery. You see the amount of money they lost? When they charge you for data now, increase their tariffs and everything, you'll be the one coming to cry on social media. That's what they will do to recover from this ditch that they are in. And then, I'm reading all this in case maybe I show you this table and you don't read it. That's why I'm taking the time to read all this. Okay, look at Wema Bank PLC. Wema was 7 naira 80 kobo per share last year. Today, Wema is 20 naira 70 kobo. Just imagine Wema, 165% capital appreciation. Anyway, let's not talk about their dividend payout because it's a bit dodgy. Zenith Bank, 38 naira last year, 72 naira today. As I'm speaking with you, 89% appreciation. And they paid 13 naira 16 kobo. Yeah, I gave them out. Their dividend payout is not good. It's nothing to write home about today. But you cannot compare, you definitely cannot compare this to MTN. And please don't come and tell me, oh, they're not in the same industry, they're not the same sector. I don't care. Remember, I'm for everybody and for nobody. Everybody in the sense that so long as you're giving me good returns, I am for you. If you stop giving me any day, no matter how I love you with my life, you see this fidelity that I'm always saying good stories about. If they learn bad thing tomorrow, I'm selling my shares there and running with the money. In Fidelity, I've made back all the money I invested in those shares. I've made it back through dividends. If I wake up tomorrow now and they say that, hey, Fidelity has collapsed, I'll just dust myself and go away. So they sold the company to another company and they say that if you have 10 shares, that you now have 1 share. When Osheni Bank went under, do you know how they decimated our shares as they transferred it to EcoBank? Union Bank has done it. The one that pained me with Union Bank was that I didn't even know when all these things happened. And I turned around and they said that your shares are not worth, like, not even the worth of the shares, like the number of your shares have reduced, that they recapitalized. Like, long story. All these things can happen. And with MTN incurring losses, their board members are going to come up with all sorts of things to be able to stay afloat, to be able to come back up. And that may include recapitalization. I'm not a prophetess of doom, but I'm telling you everything based on the data. We are chopping statistics on this channel. Please, oh, I don't understand how I'll love a company so much that I'll be making excuses for them when I know how superficial stock prices, share prices can be. We were all here in 2023, yeah? End of 2023, when Otedola poured lots of money into his billionaire friend's Dangote Cement, and the share prices of Dangote Cement started pointing up like a rocket. Somebody can just bring cash overnight and put into a company. It will rally. And then tomorrow, somebody can come and pull out the money. It will sink. While you and I are there sleeping, by 2 a.m., everything is happening. By the time you wake up, no. So my people, what do you think? With all this data that I presented to you today, with all these my points, I hope I have convinced you, not confused you, that it is better to earn dividend from a company because that company can still appreciate. Capital appreciation and dividend payment are not mutually exclusive. You can get the best of both worlds. So let me know your opinion below. How do you see this, my argument? Yeah, we're all saying our opinions, but whenever I see that you're missing out on something, you know, in this community, I want everybody to win. I want us to win together. I'm not saying that you should sell your MTN shares. So remember, I don't advise. I'm just saying that if you want to hold it, hold on to it. But don't tell me that they are good because they're appreciated. You have seen that all the other companies appreciated just like them. Even at least 3 companies appreciated more than MTN here and still paid very good dividend. Assuming that you were tempted to pull out your money and invest in FGN savings bonds while the interest was so high last year. Now, with these results, if you invested in these companies that paid up to pay 18% dividend yield, you won't regret it that much. You'll be like, oh, okay, not so bad after all. Okay, because they matched government security interest rates. Don't forget to hit the like button and subscribe if you enjoy this kind of entertaining finance video, because finance is not supposed to be uptight. It can be entertaining as well. Bye, see you in the next video.